As most of you know, today's topic is trendline liquidity, the extended version of liquidity above equal high and equal low. Today, we will learn what is trendline liquidity and why it forms, how to identify trendline liquidity, and how to use it to avoid the bad position in the market to maximize the profit. In previous video, we talked about equal high and equal low, how collection of buy orders and sell orders accumulate and how market makers manipulate the market to take down all buy and sell orders. If you missed that video, watch it from the iCard or end screen after this video. So let's start. Today we are talking about trendline liquidity. Trendline liquidity is the liquidity created when the market is trending upward or downward. Yeah, it's not that important as equal high and equal low liquidity because equal high and equal low liquidity formed at strong support and resistance area. Trendline is just an imaginary line. When price touches the 2 point, we create the trendline by illusion, thinking that when market touch the trendline for the third time, the market will reverse. But most of you know the market will never react on it, either trendline or order block. The market need liquidity to move. Here it tracks all the liquidity present below this low and this low and tap on the best price or discounted price at the lowest point and then reverse. So in trendline liquidity it has two types, ascending and descending trendline liquidity. First we're gonna learn ascending trendline liquidity. Ascending trendline liquidity is formed when market is in uptrend. As you can see, the market is making a new higher highs as well as a new higher lows here and here. During this, we create this as a trend line. Some retail traders think on the third touch or the fourth touch, market will bounce back from this zone and make a new higher high. But it did exact opposite. The market makers takes all the liquidity present below here, here, and here and tap on the best zone and then reverse. Why it happens? Because lot of buy orders are placed here due to trend line and lot of buy orders trade here due to support and resistance and lot of buy orders trades here by SMC after taking an inducement. I hope you're understanding this. It's very simple but not that important as equal high and equal low. Now let's learn why it is. Let me show you why it's an imaginary line. Let's assume the market is making a high like this. Some retail trader draw this as trend line and expect the market to touch this point and then make a new higher high. So this we create, but as you know, this is a very illusionary trend line. It never happens like this. Market need liquidity to move. So lot of buy order placed here will be taken. Lot of buy order placed here will be taken, and from this below zone also taken. So the market will come down and then reverse. So that's it for ascending trend line liquidity. I hope you understand this concept. Let's move to descending trend line liquidity concept. Descending trend line liquidity. Descending trend line liquidity is formed when market is in downtrend. As you can see, the market making a new lower lows as well as a new higher lows. Most retail traders think from this zone the market will reverse, but the market makers have different plan. They take all the liquidity present above this and above this as well as above this and tap on the best premium zone and sell. I hope you understand this. This is the exact opposite of ascending trendline liquidity. So let's move to live chart for better understanding. Let's take a look on gold chart. a daily chart. As you can see, the market is downtrend, making a new lower lows as well as making a new higher lows. Here, let's move to hourly chart. Let's move to hourly chart to see trend line liquidity, ascending or descending, both. Let's start from here, from this zone. This is one leg. So let's mark it high and low. From this zone, where is trend line liquidity? As you can see, this is trend line liquidity. After this, the market taken all the liquidity present above here, here and here and tap on best premium zone and then reverse. Uh, Now, from this zone on lower time frame, you can find this also a trend line liquidity and tap on the best premium zone, then sell. Again, on lower time frame, you can find this as trend line liquidity and tap on the best premium zone and sell. Market continued to make a new lower low. During this process, the market is now expecting some pullback. So let's see where is ascending trendline liquidity here until uh, price touches the main PY or main support and resistance area. As you can see, the market again created trendline liquidity here and tap on best discounted price and takes all the liquidity present below it and then started making a higher high, a new higher high. Again, from this zone, the market created this trendline liquidity and takes all the liquidity present below here and tap on the best discounted area, then again started making a new higher high. Now, from this zone, the market tap on daily POI or 4-hour POI, then reversing started reversing. Let's from this zone, let's see where is a descending trend line liquidity. As you can see, the markets created this as descending trend line liquidity and taken the liquidity by this move above this. All the liquidity is taken by this move and tap here and then reversed. Again, if you see, this is also a trend line liquidity. This move takes all the liquidity above the trend line and then reversed. Again, on lower time frame, as you can see, this is trend line liquidity. This move taken the liquidity trap and then move. On lower time frame again, I hope you can see. If you don't see these lines or if you can't understand this, go to 5 minutes chart or 15 minutes charts, then you will find this is exactly a descending trend line and taken by this move and takes all the liquidity present here and then boom. So again here trend line liquidity created and market reacted from this zone, then reversed. Again here trend line liquidity created by this move, the market reversed. So I think you understand this better now. If you pick any chart, trendline liquidity is same, either ascending or descending. It will look exactly like this. This is the exact model you need to find, not order block, not FEG. Find the liquidity, then place the trade above or below the liquidity zone. As I told you, the market need liquidity to move. I hope you understand my intention towards liquidity. If you find my video interesting, then do subscribe and like the video. Thank you. Meet you on the next video.